Let me now bring on board and introduce Sugata Bhattacharya, economist with Axis Bank. Sugata, morning. Thank you for joining us.
Good morning.
Sugata, at Axis Bank, what are the numbers you are working with when it comes to March IIP?
A bit pessimistic, I'm afraid. We are around the bottom of the consensus, the estimates. We are about minus 0.5. Poonam just mentioned the range of estimates that you're getting. And are some of the factors. Of course, you understand that the volatility that we have seen in the numbers makes prediction extremely difficult. We had known of capital goods volatility. We have also added consumption volatility. But Poonam had a very, very succinct summary of some of the reasons that we are expecting a somewhat lower than consensus estimates. It depends, of course, on capital goods. The only problem with capital goods is there was a very high base, as Poonam mentioned, in the previous March. And that is likely to have a somewhat dampened effect. Although we have seen CMI's capex data, which showed that the number of projects that were completed in March were relatively very high. But those are projects completed. So a lot of the activity might have gone on before with the projects. So overall, given the base effects, given what we have seen in auto sales, given what other leading indicators have shown, my sense is at Axis Bank that we are likely to end up with a relatively weak IIP growth number.
Sugata, do you think IIP data has lost its face value, given the way how volatile has been, and especially after that shocker when Government of India revised the Jan IIP data?
Well, I mean, they haven't lost their reliability. There certainly needs to be a relook at the methodology through which the IIP numbers are collated. Some industry numbers which skew the IIP data. We have seen some of these over the past few months. Watches, clocks, wire cables, rubber tubing, etc. I mean, these numbers which have come in at very, very high levels despite the low weights, they do seem to be skewing some of these numbers. So the numbers and the methods of collation definitely need a relook. But overall, I think the trends are very, very clear. Nobody can argue with the trends that the IIP growth numbers are showing.
Sugata, I mean, experts, of course, are seeing the FY12 IIP number to come in at about 3.54%. It's also a prelude to the GDP numbers that come out next week for FY12. Again, expectations ranging between 6.5 to 7%. How do you think that would kind of lay ground for the start of the data for FY13?
Well, I mean, we wait for the IIP numbers. The 6.9 numbers that have been the advanced estimates that have been forecast, that probably will go down a percentage point here or there. Agricultural growth, food grains output have been very high, so agricultural growth is likely to be relatively high. So I guess FY12 numbers will end up pretty close to the advanced estimate of 6.9%, percentage point here and there. Having said that, current indications make growth for FY13 a little dodgy. I mean, that is what is worrying us now. We have at Axis Bank an Axis Infra Index which tracks investment climate in infrastructure segments, and that's been falling quite rapidly. So investment capex data that we have seen also suggests that investment still remains relatively weak. We wait and watch for the monsoons, although the current predictions from the IMD suggest we get a more or less normal monsoon, but given the very high food grain output of last year, that will actually temper agricultural growth. And if credit flows, credit delivery, the uncertainties with foreign capital coming in, uncertainties with the rupee, all of these joined together, then the outlook for FY13 still remains relatively uncertain. Our prediction as of now is about 6.7 to 6.8% more or less at the current year's level, but it's not going to be very high, no.